So today I'm going to teach you a simple strategy that you can use on step index. This chart that you are seeing right now is a step index chart. So I'm going to share a secret, the one I use when I'm trading step index. To those who are in my groups, I think you can see that I'm the best when it comes to step index. When you're trading step index, you just need to know a few things. The first thing that you should do for you to be able to trade step index: 1, apply proper risk management on your first entry. Then on a breakout, you wait for the retracement. Then you add positions. What do I mean? For instance, right now, this is a 1 minute time frame chart of step index. So let's say this was our descending channel. You find your descending channel on the insert button, then you click objects, then look for channels. So I'm now drawing my descending channel. You can see that there's a breakout point around this area. So what you do is, let's say you wanted to add positions. You don't add positions maybe around this area, because if you add buy positions around this area, you're most likely to blow the account, because it will give you this retracement. So the best way when you want to know when to add your positions, try by all means to add after the retracement when it goes back to the breakout point area. But I'm not saying buy now. So what I'm saying now is, before you do anything, make sure that you start your analysis on a bigger time frame, which is H4. As for me, I prefer H4, then move to H1, M15, then I execute my trade on M1 or M5. That is the second trick. The third trick, when you want to trade step index, know when to add positions. So how do you add positions? When you're adding positions, you apply what is known as smart money concept. When I say smart money concept, I'm just saying, let's say this area, right? It has broken this area. So you wait for it to retrace to the breakout area, which is this one. So after that, that is when you add your positions. For instance, what happened here, it passed this stage, right? Then went backwards. Then what happened next? That is what it did. So if you want to master step index is very hard for you to trade swing trades. The easiest way to trade step index is to make sure that you scalp. This is for people who scalp, guys. Then another thing, make sure that you have a good indicator that can help you to know when to take your profit, when to take your partial profit. Then another thing which is easier when you are trading volatilities, avoid continuously adding positions. If you enter a sniper entry, leave it like that. Just put your stop loss in profit. For instance, let's say you had entered a buy here, then the market was around this area. What would you do? You would put your stop loss around this area, so that once it touches that stop loss, your trade will be closed in profit. That is another trick. So here we are now going to analyze step index together. So first and foremost, like what I said, H4. So this is H4. So I'm going to zoom it so that you can see. Let me delete this. All right. So this is our H4 candlestick. If you check on our H4 candlestick, what happened on the previous candlestick? This is the previous candlestick. This is a pin bar, but it's a bullish pin bar. But there's something funny about this candlestick. It's a bullish pin bar, but it's red. According to my chart, all red candles are bearish candles. So once you see this type of a candlestick, do not just jump and buy. You should wait for the next candle to give you the good confirmation. That is how you do it, guys. For instance, here we also have a Dutch candlestick. It's a sign that the market was undecided. So we follow the next candlestick. This is the next candlestick. Can you see what's happening here? What happened here? So that is what you do. So here you can see that it's pulling back on H4. So we are now trying to see whether on H1 is still bearish. So this is our H1 candle, guys. I'm pretty sure you can all see it. This is our H1 candle. So our H1 candle is now bearish. So since our H1 candle is now bearish, we said we scalp. Okay. So can you see what's happening right now? This candle just is about to be engulfed. Confirm. this candle is about to be engulfed. So what you do is you wait for some confirmation. So we're now moving to M5. We've seen that on H1 is now selling. So this is our M5. What is our structure looking like, guys? Do you think we can sell around this area? As for me, I think it's wrong for you to sell when the market is looking like this. It's wiser for you to buy, because you need to sell when there is a descending channel. For example, this one. This one. That is when you are supposed to sell, when it has produced something like that. But here, we can see that it's still deciding what to do. So there are high chances that it will buy, confirming with the H4 candlestick. If we confirm with the H4 candlestick, there are high chances that the market will buy. I hope you have seen it, guys. There are higher chances that the market will buy. So before you enter a trade on step index, make sure you get those confirmations that I've just mentioned, so that you don't end up losing your money. Because if you enter like this, you can see that on H4 there is a green candle, then on H1 there is a red candle. So in a nutshell, these signals are contradicting. So for you to enter a trade when the market is looking like this, you're most likely to lose your money by the retracement. Because right now, you can even try to sell, then it goes in profit. But if you continue holding, what will happen? You end up losing your money. So the best way is to do this. Always make sure that when the H4 candle is bullish, make sure that the H1 candle should give you the same signal. Then when you go to do your final analysis on M5, that is how you do it.